Thank you so much for joining us, and I'm delighted to welcome three fantastic panelists for a discussion of the road to net zero and what's ahead for COP26 in Glasgow. I'm going to dive right in by asking each of our panelists what net zero means for them. And we've got a combination of three fantastic perspectives from South Africa, Germany, and the Ontario Teachers' Pension Plan. Governor Lesotho, I'm going to come first to you. South Africa has quite an ambitious net zero target by 2050. How are you going to get there?
Well, we've got to get there. We are all part of the same planet. South Africa's economy is fairly energy intensive, and our energy comes in the main from fossil fuels. We just recently released a policy draft because it's important that as you announce targets that you take the population with you. And we had to announce an acceleration. The policy draft actually aims to reduce emissions by 28% by 2030 from the targets that were previously announced in 2015 in Paris. Yes, the targets are ambitious, and what we have been seeing is that we're rolling clean energy technologies using renewables. And what is important here to note is that we are all part of the same planet. So if there are only a number of countries that are reducing and are moving towards net zero, and others do not come along, it is not good for the planet. So it is important that as we go to COP26, that we all commit to driving the global economy towards net zero carbon emissions.
Thank you so much. And Joe, as Chief Executive Officer of the Ontario Teachers' Pension Plan, you've just announced a few months ago that you're heading towards net zero in 2050. What does that mean, and what are you going to do to get to net zero in your fund, which I think you have about $160 billion under management at the moment?
Yeah, thanks, Leslie. Yeah, so we're about 220 Canadian. I'm not sure that is in dollars. It's probably about 160. And we both invest and we also provide pensions to those members in the province of Ontario. So our outlook at the moment is, as one of the world's larger pension plans, we recognize, like many of our peers, that we're trying to use our scale and influence to ensure a sustainable future. So above and beyond the commitment we just made, what we're trying to do is to rationalize how we deal with our existing investments, as well as look at new ones that we'll potentially make over the next few years. And for us, that's actually quite complicated. We have quite a large private portfolio, about over 100 businesses. We have a large portfolio of listed companies as well. And the issue for us is really, how do we approach having a not only a defined, but a sort of regularly sustained standard of measurement and an application to the standards we want to do going forward. And one of the challenges at the moment, I'm sure we'll get onto it in a minute, is there really isn't an agreed standard in terms of how to measure, whether it be emissions or the sort of environmental approach to many companies. So we have a strong application to be not only a good steward, but actually saying that ESG practices are important, of which climate's absolutely a very central part. Let me just say, we just don't do it because we're trying to be totally virtuous. We actually believe that actually improving the climate and the ESG footprint of our companies makes them more valuable. So, we actually have a very close correlation between feeling that actually improving climate footprint and the balance of our portfolio around climate will actually have a benefit to our members.
That's fascinating. And we'll definitely come back to that issue of standards. What are green standards? Does everyone need to be measuring the same thing? But before we get there, Jochen, I'd like to turn to you. Germany has, of course, a target for climate neutrality by 2050, along with the entire EU bloc that just became law last month, I believe. And there's also quite a few changes afoot in Germany, as I believe you're preparing to rewrite the existing climate law by the end of the year. So tell me in broad terms, how do you plan to get to that net zero 2050 goal?
Yeah, thanks a lot. Thanks to everybody. And I mean, as Lesetia said, we do have one planet, and all the countries, all the nations have to act appropriately. And I want to say one very important thing in my experience. You need to create a clear picture as governments. You need to set the right targets. And then society, the private sector, will adjust their business, their behavior. So without a target, you cannot get there. And the miracle with this net zero was, in my experience, we had a target in Europe and in my country, in Germany, of 80 to 95%. And what happened is that everybody thought to sit in the last remaining 5 or 20%. But since we clarified it's net zero, it changed tremendously the debate in my country. And companies right now know they have to be carbon neutral, climate neutral by mid of this century. And yes, we are rewriting our climate law, not everything, but some very important parts, because our Court of Constitution, a bit as of a surprise, told us, well, look, you are pushing too much of the transition burden to the next generation. You have to be faster. I hope we will not be ready by the end of this year, but maybe by the end of this week. I guess at the end, Germany will go for carbon neutrality a couple of years earlier, maybe 2045. It's doable. Well, this is where we are at the moment here in Germany.
That's fantastic. One of the big topics at the moment in Germany, the EU, and around the world is how to recover from the pandemic and the economic devastation of coronavirus. And my question, Jochen, I'll come back to you first and go in reverse order, is do you think the pandemic has helped or hindered climate action? I see there's a sign that says European Green Deal behind you, which points to the way Europe has made these two things, the recovery and the energy transition, line up, but that's not the case everywhere.
Yes, and that is a positive outcome of the debates during the last 12 months or 14 months. I mean, nobody can say that a pandemic is something good, it's something horrible, and people around the world are suffering. But I think there is more awareness that global crises can attack nations around the world, attack economies. And at the beginning of the pandemic, we have just seen a couple of months before of that the birth of the Green Deal in Europe, and I was not sure whether it would survive the next month or whether we would go back into brown patterns of recovery. And I'm very lucky that we did not do so. Compared to the financial crisis 2009, 2010, it's really a complete difference. Maybe we could have done even more, but I'm very happy. In Europe, we used a lot of the money for a green recovery, what we all around the world say, to get back better.
Thank you. And Joe, for you, at the Ontario Teachers Pension Plan, how has the pandemic dovetailed with your goals with your climate goals?
I think the honest answer, Leslie, there's probably been two stages. So at the start of the pandemic, I think climate was off the table because we were just concentrating on figuring out what impact coronavirus was going to have, not only on our staff, our ability to operate, and how do we actually make sure that our existing investments were stable, because quite a lot of them were having major impact that they were seeing to their revenues and their activities. So, probably for at least half of last year, we're very much concentrating on stabilizing what we had rather than having a lot of spare time to speculate on what might be our activities for the future. Having said that, I do think that the coronavirus has accelerated everybody's view of a need for change, not just in climate. We've seen that in the digital world and in some other sectors too. And we've certainly seen around climate much more of an appetite of investors to own green assets. So if you look at renewable investment opportunities, whether they be in infrastructure or technologies to sort of enhance our climate standing, there's a lot more a competition, I would say, for those investments probably than pre the pandemic. The other thing you get actually with the pandemic is you get the knock-on effect of the impact it has on some asset classes, which makes people transfer into others. So if we give you an example, one of the things we've seen through 2020 is actually a massive change in the returns available on fixed income or gilts. And that's actually led people into investing in other types of low-risk asset classes like infrastructure and real estate, many of which are focused around renewable activity and green activities, which has further enhanced the level of competition we see. So I think it's actually positive in that, you know, you have a lot more interest and appetite for green assets, I would say, from our experience. The thing I would stress from our approach is we try to improve all the assets we own rather than just pick new ones that have a more green footprint. So this whole area of transition is a really important one for us, because I think it is important that we all try to make sure that most of the industries that we work with as an investor, in our case, we can actually make the business have a better footprint from a climate perspective. And you can only really do that by measuring what they do and actually having an aligned perspective with governments and co-investors that you're working with. So it's a combined effort to actually move what you own into a better place, as well as just investing in more sexy, topical green assets, I think. So we see ourselves as an engaged investor, really trying to improve the assets we own, as well as being thoughtful about where can we add in interesting new areas that actually have more of a green aspect to them.
Yeah. So as opposed to this movement for divestment, which many funds and activists has taken on, your approach is quite distinct and quite different from that.
Yeah, we don't really have a lot of time for divestment, to be honest. You just pass on the problem to somebody else. It certainly doesn't make the world any greener if you do that. Now, sometimes you do divest of assets because it's the right thing to do all round. So I wouldn't say we hold assets for life always. But what we do try to do is to make sure that we are adding something in terms of improving their approach, improving the way they measure their emissions and their approach to a range of issues. And we'll get onto it in a minute, but I think there's a difference between just measuring climate emissions and activities to a more sustainable and holistic approach to a business where you're looking at a much broader range of issues in terms of how the business performs. But we try to do both. Yeah.
Well, we will certainly come back to that. Governor Lesetja, I wanted to ask a bit about South Africa. I think South Africa announced its net zero target right in the middle of the pandemic, if I'm not mistaken, in September last year. How has the pandemic, the economic impact of coronavirus, made it harder or easier to set these big climate goals? I believe you're on mute, Governor.
It's a bit of a mixed bag. There is no doubt that the pandemic had an adverse effect on the economies. And as you move towards net zero, it is important that the transition to net zero is a just one. And that means that you have got to be transitioning people and jobs from industries that are polluting to new, greener technologies. But at the same time, the pandemic offered an opportunity because it then said that after you had to have lockdowns of economies, as the economies were restarting, one thing that was becoming clear was that we are not going to go back to the economy we had prior to the pandemic, and that as we make the transition to net zero, understand that we are now going to be having an economy that is different. That's the first point. The second point is that the challenge of moving towards net zero meant that for us as central banks, that we are going to need much closer coordination with the other areas of government, in particular with the fiscal authorities. And that raises very important questions about institutional settings. And as central banks, of course, we also guard our independence jealously. And so as we go into the discussions moving towards net zero, that we spell out as central banks, what is it that we would actually be doing. And there are two important initiatives that central banks are participating in. The first one is the task force on climate disclosures, which is important that we get to understand to what extent are we faced with this pollution, and whether the companies are actually disclosing fully what their pollution, to what extent they are actually polluting this planet, and importantly is what are the steps that they are taking to reduce the pollution as we move towards a net zero. And the second aspect of the central banks has to do with the alliance for the network for the greening of the financial sector. And it is important for us that we understand these things. Questions are being asked about the kind of collateral that central banks are actually taking, and whether central banks should be emphasizing instruments that are greener and so forth. And it raises important issues because there have got to be the trade-offs that we must be careful that you do not overburden central banks with multiple mandates that they actually end up losing focus. So you have all of these things, and it is important that we move at once. And it was good that central banks, as central banks, that we came together in this different fora to find what role could central banks be playing as we move towards net zero.
And just following up on that, what have you found about the climate risk exposure of South African banks, for example? In what ways is the South African financial system exposed to climate risk?
And we all are, and that is why this task force is important, because it sets the framework so that we could actually understand the extent to which this thing actually impacts on us. But what was important for us was to look initially at the channels that through which this effect would actually take place. We are a country that is vulnerable to droughts and at the same time also floods. And when these things hit us, we need to be understanding if there is to be a massive flood or a protracted drought or massive fire as a result of climate change, would the financial sector be able to meet its obligations? And here we'll be looking, for example, at the insurance sector. Will they be able to meet their obligations? The banking system is an interesting one. We are coming to grips with the extent of the disclosures. Suffice to say that South African banks have actually taken the initiative. They are actually at the forefront of dealing with clients and getting to understand the extent of the exposure. What is important as a global community is to agree on the extent and the framework for the disclosure of this climate risks.
That's so interesting. Well, I want to turn next to the taxonomy, a topic that I know is close to all of your hearts. If you're watching this, feel free to jump in and add your questions. We'll get to as many questions as we can in just a few moments. But Jochen, I'd like to ask you first. The EU has been working on its taxonomy, which is, of course, a set of definitions, a classification system for what should be considered a green asset. And it's been very, very controversial. And there's also efforts, very, nascent efforts in the US underway to develop perhaps something similar on the other side of the ocean. Is it important that the world have a common set of green standards? Are you concerned at the moment about a patchwork set of regulations and definitions developing from different taxonomies in different jurisdictions?
I think we have to start. And yes, it might be that we will have different standards and taxonomies in different parts of the world at the start. But if you want to reach something agreeable from the very beginning on the global scale, I think you will end in nowhere. So I was very happy that we started this debate in Europe. Yes, it was and it is a very heavy debate, and that is a clear indicator how important the taxonomy is for the financial sectors to take the right decision to make the right investments. And for example, we had a debate on whether or not fossil gas would be part of a green taxonomy. Heavy debate here also in Germany and other parts of the European Union. And as a Ministry of Environment, we have some doubts whether fossil gas infrastructure investments can be part of the green taxonomy. And on my argument, well, it is not forbidden to invest in gas infrastructure. It's just not labeled green. The answer from those who were different views but it's so powerful that this will increase the capital costs tremendously. And I mean, that is exactly what we want, that climate risks are visible and for those who are going to make investments.
That's so interesting that as you put it just then, that you say the part of the point of the taxonomy is to increase capital costs for investments that don't line up with climate goals. And Joe, how do you see this? Do you think it's important that everyone is measuring the same thing and that there's common sets of green standards?
Well, I think at the moment we've got a bit of a soup of different ways of measuring things, and it's quite hard to sort of align the investment community around greening and aligning the approach. So if you think about it from our perspective, it's not only the investments we make, but we also co-invest with lots of other institutions around the world. So it's sort of helpful to have a similar approach, a similar standard in terms of what we're looking to achieve with a new investment or with an existing company. Our approach to date has been we've called on investors and companies ideally to adopt the SASB standards. So that's the Sustainability Accounting Standards Board's approach, or TCFD on climate activities. So for those on the audience who are not quite as familiar, TCFD, as I describe it, really focuses on climate. It's a bit more of a backward-looking measurement, whereas SASB is more of a holistic, sustainable approach to looking at the business, where you'd also involve human capital, wastewater, product line activity in terms of what it does. The advantage for us of sort of trying to have some sort of agreement, and Leslie, this might be one where we sort of start to develop one in North America, perhaps more than one internationally, but it does allow you to sort of say, you know, you're measuring the same sort of issues and you're aligning on where you're trying to get to. And I think the hope for me would be, if you look at COP26 coming up, you know, that could be something that's discussed as much as just a follow-on to the Paris Accord, where you're basically saying, can we just have more bold targets in terms of where we're trying to get to? I think the other one which is relevant is it's not just how we invest, but it's also from our perspective how we raise capital. So we raise green bonds, and they actually have to have a sort of an approach in terms of measuring whether they're actually green assets that we're going to invest the money into. We use third-party sort of people who will rectify that particular view, like Cicero. But again, you know, you need to have an approved and agreed standard. And in that case, we're tending to use more EU standards in terms of how we see the bar in terms of saying they will actually be green assets we'll deploy the capital into. So back to my point earlier, it's relatively complex, but I think the simple message would be if we could align more closely to one or two standards, whether it's for climate emissions measurement or it's equally sort of more of a sustainability approach, I think that would be really helpful.
And Governor Lesetja, how do you see this question? You mentioned just now that South Africa is working with the TCFD to review the climate risks in the South African financial system. Do you think there's a challenge or a problem around definitions and green standards, and whether, for example, natural gas should be considered to be a green asset or not?
Very important that we have common standards, because you see, one of the things we have to worry about as central banks is to identify the potential risks and vulnerabilities. And for that, we need to gather and analyze data on those potential risks arising from climate change. But for this, we need common standards, because let's face it, even with the commitments that are being made, we aren't synchronized. Some countries have set themselves target dates of 2025, others of 2030, others are 2050, and so forth. There are different timelines that are being set. It's important that we have we reach convergence on this. That's the first point. The second point is that we need to understand what is it that we are going to really be categorizing as green. And unless we have an agreement on that, how are we going to measure who is making the transition faster than the other? And thirdly is that for us to move to net zero, it's also important that we understand who the emitters are, where are they located, what are they emitting, and what commitments are they making towards it. I can't emphasize this thing more. We are on the same planet, and unless we move together, it is not going to work for what we are actually trying to achieve.
That's such an interesting point, that not only are green standards necessary to compare between companies, but also for countries. And I think that's one of the topics ahead for COP26 at Glasgow, is a framework and standards for countries' own emissions disclosure to make sure that that's all lined up. We're getting some fantastic questions from the audience, so thanks to everyone who's asked a question. We will get to those in just a moment. I'd like to turn first to COP26, and I'd like to ask each of you what you would like to see at COP26. Jochen, I'll come to you first. I know Germany's hosting the Petersburg Climate Dialogue this week, so you're in the middle of all the action. What's your wish list? What would you like to see happen in Glasgow in November?
Yes, I think one of my wishes already starts to be realized. We were hoping that many countries will come up with enhanced NDCs, the National Determined Climate Contributions targets actually. And we were so happy that we managed to get a new target for the EU to be, and we announced it to the UN. And then we saw that the US followed, others followed. So we now have a reasonable set of very important emitting countries that already announced a new NDC. And that was not clear some couple of weeks or months ago, and the Biden summit gave it another push. So I think we are on a quite good track. We need some more commitments from more countries, but I think that is already something we can be very happy about. The next one is we need to finalize the open questions of the Paris Agreement. There are still some unsolved issues in what we called rule books, implementing rules of the Paris Agreement, such as transparency issues that you just mentioned, but also the architecture for market mechanism, what we call something like a global emission system, trading system. And this is something where we need to be very strict and very clear. If we want to see these markets to start operating, then the rules have to be 100% clear, no double accounting, no room, if I may say so, for cheating. Otherwise, investors will not get into this kind of markets.
Thank you, thank you. So that's what you're hoping to see from COP26 from the perspective of Germany. Joe, what about you? You mentioned just now you'd like to see more progress made on green standards this year at the Climate Summit. Anything else?
Well, it's some of the same comments, if I could. So, ideally, you get a better roadmap towards net zero ambitions for different countries. The host country UK is actually legislated for that. They've committed to 78% reduction from 1990 levels by 35. So that's a good start, potentially. So why does it matter to us? I think it gives us a more predictable and stable regulatory environment when we're trying to invest in clean energy, which is one important thing. The other thing is that through our own activities, just to be honest, so if you look at teachers at the moment, we've been able to increase our ability to measure to about 70% of our activities by adding in credit recently. The area where we're struggling a little bit is sovereign bonds, where we can't actually have an easy measurement, and there's this risk of double counting between how you measure the country and the companies within it in terms of their emission activity. But anything that can move as close to a sort of gold standard of measurement, I think would be fantastic and would actually allow us to navigate some of the complexities of our activities a lot more easily.
Thank you. And Governor Lesatcho, what would you like to see at COP26?
Look, I think that for me, if you could just understand that we have this planet, and this planet is not just what we inherited from our forebears. It is actually something we are borrowing from our children and their children's children. And it is very important that as we think about the adjustments that must be made, that we do not shift the burden of adjustments to future generations. That this generation must understand its responsibilities to the planet and actually make the adjustments, that we be the people who are making the adjustments now rather than pushing it down the line to generations that come after us. Secondly, is that we must got to understand that the burden of adjustment actually is falling disproportionately on emerging markets and developing economies. And given that we are on the same planet, it is important that we also make sure that developing economies are assisted in making the transitions. It is going to be of no point for a country that has got resources that gets told that your resources are polluting, you cannot utilize them because it's going to lead to climate risks. But nothing is being done to assist those countries to make the transition. Ditto for those countries that are host to rainforests and so forth, which are like the lung of this planet. Yes, you've got to protect all of those, but unless we move together and avail resources so that the transition is just and fair, we would actually be failing. And that, for me, as we go to the summit, that we've got to be setting goals for us as a global community that are ambitious, and at the same time making sure that those of us who would struggle with the transition to net zero are assisted to make the necessary transition.
That's right. So as you said, it's so important to make sure everyone can make the transition, especially the developing nations who often have the heaviest burden of making the shift. I'd like to turn now to some of the great audience questions. Thanks to everyone who submitted questions. And there's one, in fact, on this topic that you were just speaking on, Governor. The question is, does Leave No One Behind include developing countries? And what do large investors, such as the Ontario Teachers Pension Plan, need to invest in Africa? Joe, I'm going to wing that one over to you.
Well, from our perspective, we are an international investor. We have invested all over the world on a regular basis. I think the question for specifically to answer it for Africa would be, to be honest, we need to make better rate returns. Our returns from Africa to date haven't been great, whether it be the currency translation or the ability to actually find attractive assets. And it's really also a question, because we're a very long-term investor, of trying to find a political and regulatory environment that's as stable as we would find in other parts of the world, and even other emerging parts of the world, such as Asia. We do invest in emerging countries, and I think the issue there really is actually making sure we've got an appropriate premium that we're being paid for the risk we perceive we're going to take. So, you know, my responsibility first and foremost is to make a return to be able to make sure we continue to pay the pensions for our members. But what we also try to do is to be thoughtful about how do we help emerging countries with their transition in terms of being able to think about emerging infrastructure, power, and other things that can be helpful. And then you get back into the same question about transition fuels, Leslie, you mentioned earlier, and other things, which does get a little bit complicated, because I think as a developed investor in a developed nation, you've got to be a little careful. You can't just apply the same approach, which is to say, you know, not keen on coal, not keen on all fossil fuels. You know, that is probably an unduly simplistic view of things. So we have to find a way of trying to help with transition activities as well. But I would start from the premise of, you know, when you have the opportunity to invest all around the world, I think the first question you ask when you're looking at some areas which are either a little less familiar or have a little more risk attached to them is, are you actually getting paid for that risk? And if you're not, you're probably going to fall back to more familiar territories, which do allow you to receive that premium.
We only have a couple more minutes left, and I want to get to as many questions as I can. But Governor Lesetja, first, I'd also like to give you a chance just to respond to that.
I actually thought that Joe did a fantastic job responding to that. And I think that there is another angle that we have got to bring in, as he was referring to the continent, that the continent is also a source of minerals that are required to make the transition happen. And so these things, there are a number of trade-offs that we are going to have to bring to the fore here. But I also wanted to move to the area of green financing. That it is an area that is actually rising very fast, and it's an area that I think that the continent could be tapping into. But as we had said earlier on, and Joe correctly captures this thing, that you can't just go into a country and says that stop using these resources of yours. It's not going to be very helpful. You have got to help with the transitioning. And one of the transitions that we have been doing in South Africa, as I said, that we are a country with a lot of coal, and that is the resource that we had been using, is that as we replace aging power stations, we have actually embarked on a very aggressive renewable energy program. And that renewable energy program is in itself becoming a source of finance, so to say, because we are now able to tap into those green financing activities to finance our renewable energy program. So it's important that we move at once on this. And I think importantly is for the financial sector itself, because the financial sector, unless there are standards, you're going to have a problem. It's one thing, Ontario teachers doing one thing on green finance, and another pension fund in another country takes a different view, and you have got banks taking a different position. And this initiative that is underway in the financial sector of making sure that the financial sector sets standards and responds to that is absolutely what we actually needed at this stage.
Yeah, that's fascinating. We also have a question here about the nuclear industry. Jochen, I'll put this one over to you first. What does the panel think about the French back and forth around the place of nuclear in the future energy mix? And is there an opportunity for politicians to educate the population rather than hyping on populistic voices. Jochen, I'd like to ask you about this because Germany has, of course, turned away from nuclear, and explain why that is. And I'd also like to hear the other panelists' views on the role of nuclear power in the energy transition.
Thanks a lot. Yeah, I don't want to talk about French decisions. They're close friends of us, but as everybody knows, on the nuclear issue, we are of different views also compared to UK. We have made our decision to phase out nuclear by end of next year. We are on our way. And by the way, I'm also responsible for the storage decision to find the final dumping place. And I can tell you, it's a very costly, extreme costly business we are doing here. It will last a very long time. So we are far away from seeing nuclear energy as sustainable. Another issue for the taxonomy, but I know that we have different views in Europe on that.
Thank you. Would anyone else like to chip in? If not, we also have a question on methane. What is the panel's opinion on the importance of methane emissions and including methane in greenhouse gas calculations? Now, I believe most countries do include methane in their calculations already, but it is, of course, much less discussed, much less talked about than carbon dioxide, the main warming gas. What are your views on methane? I don't know who would like to take this one. Jochen, I see you nodding along.
Yes, I mean, it's a very relevant greenhouse gas. And it is calculated, of course, and it needs to be calculated. For example, if you are talking about fossil gas, you need to look also at the methane emissions that are linked to the drilling, for example, and also for the transmitting line. So it's absolutely relevant, and it's one gas that out of a set of what we call short-lived climate pollutants, a great initiative from UK, US, and other countries a couple of years ago. We are part of that, and I think very important point to reduce this kind of very heavy greenhouse gas emissions.
Thank you. And then our last audience question, I'm afraid we may not be able to get to all the questions, but thank you to everyone who's typed them in. Our last question is, where is the global coordination between nations failing? I feel like that's an issue, that's a question that could apply to all sorts of topics, not just climate change. But when it comes to climate, where is coordination failing? Joe?
I don't think you can look at this question without understanding there's also a political dimension in the world at the moment. And, I think that does exist, and I think it will exist in the up and coming conversations. To me, the hope is that you approach it from some of the comments made earlier, which just to say it's better to move things forward, agree closer and more aligned standards, and actually be able to measure progress on how we're reducing emissions and moving closer to a sustainable activity. Who actually owns the best standard or the right standard? I think if we can get away from that, that would probably be helpful, because otherwise you just get into a bit of an arm wrestling contest in terms of who's driving the situation. So yeah, I think we should accept there's politics involved, but I think actually the big notion which has been mentioned earlier is the more we can do to help the planet and actually align our objectives in terms of what we do and how we invest, I think would be and should be the first step.
Thank you. Thank you so much. Well, that's all we have time for today. This has been a fascinating discussion. There's so much more left to talk about, but thanks so much to our fantastic panelists. Thanks to the audience for your great questions, and back to the studio. Thank you.